All right, welcome back to the same exact chart I used making the last video. So here we go. All right, let's talk about displacement versus manipulation. Okay, this just think of displacement as your compass, as your arrow. Okay, if you could, like create a little robot that like sat down here in the corner of your screen and just pointed to bullish or bearish, right? And he just points in one direction. Displacement would be that pointer. Okay. So, but you need to be able to distinguish the difference between manipulation and displacement. Okay. So let's take a look. All right. This London high right here, I was looking for, well, that's close enough. I was looking for a short. Okay. And I always pay attention to London highs, London lows, and I always want to see what's going on there. Okay. Technically, this should be, there we go. Okay. So market opens and we're kind of like middle range here in the London, and we just blast off like a rocket and we bust above this. Okay. Now, if this candle had come up and then came down and then came up and then created a fair value gap right here, or yeah, I would actually be right there. Okay. What would I be looking for? I would be looking for a long. Okay, I would start to change my bias here. Like, okay, obviously we're not going down because we displaced through this time-based liquidity. We displaced through this, and we are creating fair value gaps above it, and we started respecting those fair value gaps. That's where I would be looking for more upside. Okay, but more times than not, right? Here, let me just get this because I have the London highs right here on the chart. Boom, like that. Okay. What did we do? We displaced way up. I bet you a lot of people are like bullish, 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 bullish. What did we do? We pull back down. We pull down real hard right here. Okay. And what did we create? We created a fair value gap. All right, right here. So we have swept a time-based liquidity. We had manipulation up. We swept it with the manipulation. We came back in, okay? And then we pull up into this range. We're coming back to internal liquidity right here, this fair value gap. And what do? We absolutely just reject from here, okay? This would have framed a nice trade, all right? I could have come in here. I could have shorted somewhere on this candle, this candle, this candle, this candle, this candle, this candle, this candle. I had plenty of opportunity, okay, to see that this fair value gap was holding. Now, I would have really liked the fact that we were still respecting this fair value gap during the macro. So knowing myself and how I like macros, I like to trade. I favor my trade setups when they show up in the macro. I would have favored somewhere in here, okay? And I would have put the stop at the high, right at the high, boom, just like that. And I would at least target a 2-to-1. Just like that. Now, as we talked about in the last video, which I don't even remember which one it was, there's a fair value gap right here. Okay. And that fair value gap is right here, roughly. Okay. There's a fair value gap there. So this would have been my target. Okay. Now, I would be looking to take profit at this external range right here. I definitely would have taken profit there because that is almost a 2-to-1 right there. So I would have definitely taken off some contracts there. And but I would have kept going down. But as soon as we started getting into this fair value gap, I would have closed that trade for sure. Now it says 3.35. That would have been if I held the whole way. I'm just telling you by my own trading plan, I wouldn't have. So I probably would have ended up with 2.4, 2.5, RR. That's fine. Anything above 1 to 2 is just, it's money all day. All right. So that would have been a great trade. Now, what framed this trade for me was this displacement as we pushed above and we start displacing down. Okay. And then this displacement as well. Here's another one. This one, honestly, this first one's a little aggressive, but I've shared openly. I'm an aggressive trader. Okay, so even if I had waited for all of this to be displaced through, boom, right here, right? Let's say I waited and it's just like, oh man, I missed the move. Nah, most of the time, not. Okay. The displacement created this fair value gap. We push down, we come back up. We hit this fair value gap, and what? Boom, we pull down. So how would that trade have looked? Okay, you'd have to be a little quicker on this one, but you'd have this candle, this candle, this candle, this candle. All right, let's just say you got in just a tidge late. Like that's about mediocre, right? You can put it at the candle wicks high that created the fair value gap here that we're looking at, right? And target 2 to 1. Boom. There's your trade. Okay. And that's given you, you know, like roughly 9-12 minutes to get in. I mean, you really could have even got in on this candle down here, and you can put this at the top of the candle body if you feel better about the R&R. Okay. I tend to try to give it a little bit more room, but you know, you don't want to like over leverage. So there you go. Okay. So that's how that works. So you're waiting for this manipulation to point to where you're going. Okay. So when we get like a giant 1 hour displacement candle, I'm paying attention to which way it's pointing. Okay. That may take time to play out, and it may not be applicable to my current trading that specific session. But if the 1 hour blasts off somewhere and I'm looking at it, I'm like, oh, okay, maybe maybe that was a displacement that's going to point to a market maker model that's going to point to a buy model soon. Okay. So displacement is your barometer. Okay. It is your compass. It is going to let you know where things potentially are going to go. All right. So I hope that that was good. Let's go ahead and draw displacement really quick just to make sure that was all chart examples. Let's try, and you know what? Where's my arrows? Not my arrows, my path. Here we go. Okay. So this right here, that right there is not displacement. Okay. This right here is manipulation. It comes down, it sweeps these lows, and now it's coming back in. Okay. That's not what displacement looks like. Displacement looks like this. Okay. And normally the displacement, this is huge. Normally the displacement is going to create fair value gaps outside of this range that was created. All right. So that's another way you can confirm displacement, is make sure that we have it. And then what can we expect from that? Okay. It doesn't always happen, but if it's framed correctly with your bias, your top-down analysis, you know, you might get a little bit of action that comes back up and then continues down where? To some kind of external range liquidity. That's a little crooked, but you guys get the point. Some kind of external range liquidity that was down here. Okay, and that can become your target. All right, so displacement versus manipulation. This manipulation is where most newbie traders get taken advantage of. Okay. All right. And let me explain that, because that's actually really important. So I've got a range. I've got a little bear flag happening. Oh no, it's a bear flag. So what are they going to do? If they truly want to go bearish, are they going to allow all of these shorts? There were people shorted here, shorted here, shorted here, shorted. No, they're not. What are they going to do? They're going to manipulate it up. They're going to take everyone's stop losses that are sitting here. Okay, this is going to be the manipulation. Okay, and then they're going to have the true move. Okay, and the true move sometimes is sharp, sometimes it's not as sharp, but sometimes it looks like this. Now, what's going to be the difference is you're going to have, fair value gaps being created out of this range. Okay, sometimes even more than one, because that's when it really goes. Ooh, that was a little big. There we go. Okay, so this is huge. That's the bearish example. Okay, if you want to invert that, oh, I don't want to mess with it right now. Actually, I think it's down here. I don't invert my chart very much. There we go, invert scale. Boom. That would be the bullish scenario. Okay, they pull it down. They look like they've got a nice little bull flag. Like, check this out, check this out. What are they building down here? All of this is liquidity. They're going to sweep that to actually go bullish if they're bullish as narrative. All right. So there you go. That is manipulation versus displacement.